Today, guys, I'm going to go into why ICT doesn't work and why I have a method that actually works. Okay, I showed this recently on this contract, so let's just go to an older contract. Let's just pick a random one. NQU2020. Okay, I'm going to show you why ICT doesn't work. Okay, so let's just like on this, let's go on a daily chart. Right, so this is 2020, near end of 2020, not quite end of 2020, but you know, bull market, all that, yada yada. It doesn't really matter. It can be any type of market environment, and I'm going to show you why ICT doesn't work. So ICT talks about liquidity. He's talking about how stops get ran. That does happen. As you can see, it went below these, and then it starts going upward. Stuff like that too. Of course, that's a real thing. And you know, he's not the first person to see that kind of stuff. But when he's talking, but he is about day trading. And if you're struggling with ICT, I hope this confirms to you that it's just not legit. Also, people are switching over contracts here, so I'm not going to focus on that. That's why it looks illiquid. So let's just go back towards here. So you'd say, well, I'm waiting for this liquidity to get purged. Well, it doesn't get purged. You wait for that. It doesn't get purged. Oh, look, there's a fair value gap right there. You'd expect it to sell off, right? Okay, let's look at the silver bullet model. Between 10 and 11 a.m. there should be a fair value gap that gets hit. Well, it does kind of come into this one and then moves further. So I guess that's sort of valid, but you know, there's also a fair value gap right here, and you know, there's a apparent market structure shift right here, but in the fair value gap, and it goes up higher. So the thing is, you could tell me I'm not being nuanced enough with it, but look, I'm not going super deep into all his little nuances, but I'm telling you this. I studied ICT day in, day out for over a year, and I made no progress as a trader. None. Because it's a fraudulent method of trading. He teaches a few valid things and then bunches them in with a bunch of false teachings, and then like packages it as gold, and like, you know, but you're like, oh well, he doesn't sell courses, so how can he be a fraud? Well, he used to sell courses. Not only that, let's just talk about a timeline of ICT. Okay, he started in the 1990s, okay, and now he's trading in the 2020, or you know, whatever. He started trading in, I think, 1992, 1993. He was making mentorships already by 1996 or so, 1996, 1997, and he actually got in trouble with the SEC, I believe, or it might have been the CFTC. I forget which one, but he got in trouble. He got a big slap on the wrist because he was teaching fraudulent content and stuff. So you're telling me that within like 3 or so years of him starting to trade, that he already understood this stuff so well that he could teach it, and then he got in trouble for teaching it, which supposedly is because he was giving it away? Like, I get it. Like, if you were giving away how the market works, like, you could get in trouble with the, you know, guys who don't want people to know that. But, like, okay, it's the timeline of how long it took him to learn how to trade. Plus, in recent videos, you will see him brag about how he was teaching the same stuff back in 1996. So he's acting like on one side, he'll brag about how he's got 30 years of trading experience. Then on the other side, he'll say that he was teaching this stuff that he's got 30 years of experience with. He'll say he was teaching it back in the 90s and early 2000s. And it's like, well, there's no way that if his whole system worked, there's no way that he understood all this. Okay, so he's very delusional, but he also is just lying. Anyway, you'll notice how his stuff, like the fair value gap stuff, it seems pretty relevant and valid. And like when you're looking in like a progression of price, like it makes sense. Like if you catch a leg as it's going and then you enter in a fair value gap and then it keeps going, yeah, that kind of stuff does happen. I'm not denying that. For example, here, right there's a fair value gap. It barely taps into it and then it keeps going. But guess what? It turtle soups that anyway. So like, and he would say your stop's supposed to be here. So again, I guess that trade works. But why is price reversing here? Why is price reversing here? Like all that. He's not really answering that. All he says is liquidity. Okay, well look at this. Sell side liquidity gets purged here, and it would get purged here. Yet price goes way past this one and doesn't quite hit this one. So clearly there's something more to it than what he's teaching, right? If you're confused by ICT, I hope this like helps you to understand he's a fraud, okay? So what I'm going to do is I'm going to show you what actually works. 9:30. I did this in my last video. 9:30, opening balance candle. Oops, that is not the right tool. I wanted a horizontal one. Okay, 9:30, 5-minute chart. 9:30, opening balance. Right here. Look at this. Okay. Price moves away. The lows of candles are closing above the high of the 9:30 candle. This indicates bullish price movement. Lo and behold, it ends up moving away. But anyway, you enter as it retraces into the high of this candle. It almost gives it to you here, not quite. Again, this isn't going to, I said this before, it's not always going to be perfect, but in a way it is perfect. So your buy limit is here. You get in long here. Now, this kind of trading, you're going to have to be watching your chart a lot, like throughout the day, and positions can happen like at different random sessions. Okay, this isn't exactly how I trade. I trade a different system similar to this that it only is during the New York session. I'm not going to disclose that. But what I am going to say is you can trade profitably doing this. So anyway, your buy limit's here. You get in long here. Your stop is a candle that closes below the 9:30 candle, and then a candle that closes below that candle. That's your stop. So as you can see, wick, 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 not closing below, finally closes below. Okay, this gives an indication that maybe it wants to fail. So you have to wait for one more candle confirmation. I said this in my last video a lot of times. I didn't cherry pick this one. I picked a random contract. Look what I said. One candle might color outside the lines, but very rarely will two color outside the lines. The next candle goes below the low of it. Think how many people who were in long, even trying to trade this type of strategy, got spooked out right here. What does it happen? That's the apex, the culmination, or it's the not the apex, the opposite. You know, it's the vertex. It's the very bottom. So you're holding it through drawdown from here. You could even enter more at the low of the 9:30 candle, hoping that it will go back for you, so that you're in from here, and you also have a DCA'd position here. The loss on your extra position will be smaller, but your win will be bigger. Anyway, so one candle away from getting stopped out, but you don't get stopped out. Then what happens? Price moves for you. Boom. You can target this high to take profit during the London session. It ends up going past that high, but you'll take partials. So I would, if I was really trading this way, I would be going for I could use the profit tool, but whatever, same thing. So if this is the one, so the 2 is a 1-to-1. So I would go for a 1-to-1 of the 9:30 candle as my first partial. So before the day even closes, you take your partial. Then you can move your stop loss to break even if you want. You don't have to, but you can. I think it's not a bad idea. And then you'll take another partial at a 2-to-1. So actually, at a 2-to-1 would be at this 3. So then your next partial is here at a 3-to-1. At that point, you can leave your stop at break even, or you could move your stop up to the 2, or move it into profit, whatever you want to do. Your next target would be the 4. Your next target would be a 5. Okay, so on and so forth, if you want. Or you can frame your own take profit model as you want. I'm just telling you where to enter and what price is actually looking at. Okay, you can clearly see that price here is doing something regarding the opening range of the first 5 minutes of the market open. Yes, it does some tricky shit right here to try to fake you out, but it doesn't really color that far outside the lines because it can't. If it colors too far outside the lines, then nobody's making a profit, not even the people who manipulate the market. Sometimes it will do that, but consistently you will see that it doesn't do that. Now, the 8:30 candle is also a balanced candle. This is created often by market manipulations that occur during news. I wouldn't trade this candle, but you can see it's probably relevant too. Let's just look at the 8:30 candle. This is a previous day though. Price trades away from it. Highs of candles are closing below the low of the 8:30 candle. Comes back into it. Boom, that's your short sell. And then you might see a continuation of that play. Actually, it was at 9:30 that it went back into it. So you can see Then the 930 candle, which I'm just going to treat the low of the 830 and the high of the 930. They're close enough. So that line is that. Here's the 930 candle. Price trades away from it, gaps below it. Here, highs of candles closing below the low, trades back up into it right there. That's your short, okay? Wow, think how much money you would have made. That's no joke. That is a lot of money, okay? Anyway, let's, I don't think it comes back there during this contract. No, it does not. I'm willing to bet, though, that since it only tapped into that a little bit, there's a high probability that when it comes back to the low of the 930 candle again later on another day, it will probably have a strong reaction from there. It may not trend down for days, but it will have enough that you can take a partial profit, move your stop to break even, and at least farm a small win, if not a bigger win of it trending for a while. Okay, let's go to the next day. Does this look easy? Isn't this funny? This is easier than ICT and it actually works better. Okay, so this one is going to be a little nuanced too. This one actually maybe you would have, no, you're just not. I'm going to show you why. So you can see this is the 930 balance. Boom. Okay. Technically, you have one candle down close, closing below, and then another. So technically, you'd stop out there, or you could have the stop at the low of that candle, or you might just stop out there. I'm going to show you why that's not the case. I've noticed this. This is deliberate. I'm not just making an exception. This is what it does. You see how this down close candle only closes, see the close is, it's right here. The close is 11412.5. The low of this candle, 11414.5. 2 points. When it's that close to the low, it doesn't really count as closing below. I've just noticed that. So you're looking for something that's closing like 4 or 5 points below. Okay, then it's valid closing below. This is, again, it's coloring outside the lines of this range. So I would wait for like 2 more candles to close below the low of this candle. Again, your risk gets wider, but it is what it is. As you can see, gaps up away, there's a trade here, but there's also, that's only one candle. I wouldn't really trust that. This is really the trade. As you can see, it ends up in a higher objective, but also, well, I'll show you. And again, you see how this one closes a little bit below that? It's like less than 2 points. So again, it's like actually, is it less than 2 points? I don't know. Well, this kind of modifies the range though. So you see the color outside the lines, they'll try to like make criteria. This is because if someone's trading this based on a bot that will go purely based on below the low, they'll get stopped out for a loss. So they kind of color outside the lines a bit. But again, usually it's a lot cleaner than this. This is like kind of rare. But anyway, so gaps up, you're long from here, you hold through some drawdown, but then it comes back up. You can take a partial above here or like at a 1-to-1, whatever you want. You could move your stop to break even, you might get stopped out there anyway. Or you could be taking a partial, not moving to break even, holding for higher targets. It's up to you. Just back test and see what works better. Either way will probably be profitable. One thing you can do is wait for it to kind of gap away after it stopped you out at break even. So you're already stopped out here and then it gaps away again. So you might get it along here. You'd have to hold through drawdown. Here it might look like it's going short. So maybe you would have tried to switch your position. But again, it hasn't really violated this low here. It did it by like one candle, but not really, right? So it's just trying to run stops. This is how stop running. This is how like Goldman Sachs or whoever is, big trading houses are running stops. They make it almost look like it's going to sell off, but then it reverses. So it's all about deception. But as you can see, it gaps away from it again. So, whatever, even if you took a couple losses in here, this makes it very clear that it wants to go long again. So it comes back into the 930 range again. And there's a big long. Right? This one happens during the Asian and London session. So, see how I'm talking about some macro type stuff in terms of price action, like big picture, not big picture on daily chart, but big picture like over the course of an entire day, how price is always relevant to the opening range. And if it isn't, let's say it doesn't trade back, like let's say it runs away from this 930 candle, there's a very good chance that if it runs away for days at a time, mark that level, because when it comes back, it won't always happen, but there's a very decent chance of it having another strong reaction again because it hasn't taken any break-even stops out from there. So once it does, there's going to be a swap. Like there's going to be an influx of volume, and that's a real liquidity sweep. Okay, it's not like just lows and highs and stuff. That's not liquidity sweeps. Okay, so that was that day. Let's see. I'm guessing this is the 930 candle. Once you get used to it, it'll be pretty easy to spot, by the way. Okay, so 930 candle, pretty wide range on it, but it is what it is. Can't complain. You take what it gives you. Boom. Gaps away. You miss this part of the trade. That's okay. Look at what it does. Okay, so here it's telling you it wants to go long. Now you're waiting for an optimal. If you want to use an ICT term, this is the optimal entry. You're waiting for it to retrace into the 930s candles range. Look, boom, not a single candle actually closes below this modified opening range, which is modified by a wick that goes lower than the 930 candle, but as you can see, the bodies are actually within the 930 candle. So no candle even closes below this. Only one candle even closes below the low of the 930 candle. So you'd be in through drawdown here. You might even add a position here and then below lows. Like, so it's, you know, the smartest buyer in this whole day was someone who bought below this low. Okay, or they were lucky. Maybe they didn't know why, but you know, if you're buying below that low, you probably know why. As you can see, plays way out in your favor. And all this other stuff that I'm talking about, like being in from this day, the thing is like it may be stopping you out here or like making it almost like it's going to fail. But remember this: there's long positions that are holding from that got long from this entry. So they don't care about this. So that's sometimes why the market will chop a little bit and try to break the rules and shake you out. It's because like the real winners are still long holding a partial from this position, right? You see what I'm saying? Maybe they'll add to it there, but anyway. Figuring out how to properly and completely optimally trade this is going to take time. I don't even know how to completely optimally trade it. There's so many possibilities for what you could do. Anyway, let's go to the previous day. Now you might notice that the 6 p.m. candle also seems like it's kind of an opening balance. I have not seen it be as reliable though. So I stick with the New York Open. So it's pretty obvious what one's going to be the 930 candle, right? You see a big change in volume. Okay, so what happens here, guys? Does this one work? It kind of does. It's not the best though, I'm going to be honest. It technically kind of works, but it's not like, I guess it does work. It does work. It does work. So this is a short, obviously. Opening balance, look, trades away from it. One candle, but it's green, but then there's a red candle closing away from it. It doesn't actually meet the low. Another one's away. So yeah, there's a decent enough chance here that it wants to short. So then your sell limit's here, because you don't know if it's going to go up this far into it. It might just go up to there. So boom, you take a short position there. A stop is like 2 candles closing above the high of this candle. Also taking into consideration wicks modifying the opening range. And here's your short. Okay. Now this is where if you move stops to break even, it goes a lot better for you, but it is what it is. You know, I haven't figured out whether in the long run holding positions without break even, like whether that's still profitable. I'm sure you guys have heard me say this before. This is a long biased asset. So maybe one simple rule for it is if you're going short, always move your stop to break even after a partial, because this asset at any day could move up and from wherever it's at and never ever go back there ever again, right? Just go look at the NASDAQ chart. Yes, there have been long terms where, like, if you look at the .com high, it took like almost 20 years for it to get back towards that high. But along the way, there was a lot of lows. If you were trying to short sell the climb from the .com low, or like the housing crash low in 2008, 2009, again, it never went back there. But if you ended up being in long at a bad place, if you hold long enough, technically you'll eventually get back to break even, right? So that's what makes this a really easy asset to trade. So just to keep in mind, if you're not going to move your stops to break even, Do that with long, but with short, always move your stops to break even, because again, it might never ever come back to the place where you're short from. Okay, so as you can see, this range, once it actually gaps above it, this whole range actually becomes relevant to the upside, as you can see. Isn't this shit easy? This is the big picture. Isn't it so fucking obvious now? It's like, wow, how did we not see it? You know why? Because no one tells us about this. No one wants you to know about this shit. I don't even know if ICT knows this. I wouldn't be surprised if he does, but like, shame on him for not telling us this, if he does know this. And I'm not sure he does, because I think he would, if he really knew something profitable, he probably wouldn't fucking tell anyone. Okay, so what is this, a long or a short, guys? I think it's pretty obviously a short. No gapping above the 930 range. Takes a while, but after 11, moving down below, like strongly away. Green candles, but they're all closing below the low. There's your short back in the range. Boom. Fucking simple. All right, so fucking simple. You can make so much money doing this. Think about this. How much profit would you have made if you take partials and you actually capture like a large portion of these moves, versus if you like if you have a losing day or whatever? It might be a big loss, but your big loss is going to be probably at max like one of your small winner days, right? Like it's going to be a bit bigger than like your first partial break even. I would say like maybe your second partial break even, that'll be the size of your loss. But all the days when you catch it running for far, like this is very profitable. Okay, that's all I'm going to say. This is how the market works. Okay, where's the 930 candle? Right there. Okay. So what do you have? You have one candle gapping below, not closing very far away, and not distinctly down closed. Does that indicate a sell? No, it does not. Closes above. Look, retraces almost, doesn't quite hit it. What would I expect then? It does, again, this won't always happen. I haven't checked. I don't know. I forget how it reacts, but I would say there's a decent chance that whenever, at any time of day, it retraces into this, there's probably a strong reaction. Okay, guys, look, it's fucking simple, okay? It's hidden in plain sight, okay? If you find this, just don't share it with anyone because you'll regret it. Now, there are times where I think this day is going to show you you're going to get burned, probably. Okay? You're actually going to get burned decently badly. I don't know if I'm going to get into... I guess I kind of talk about it. So, as you can see from here, it gaps away, retraces, and then there is a reaction to it. So people who took a quick partial and moved stop to break even made money. However, it didn't even move up a 1-to-1 of this range before failing, right? So this is where it gets a little tricky. You have it gapping away here, gapping away again, closing below. This looks like a short, right? You're in long from here. If it's moving down here, maybe once you see that it's confirming that it wants to go down, I would say switch your position here. So you'll take a loss that's the size of the range, and then you'll try to go for a 1-to-1 of that range for your first partial, again, to try to make back that loss. Move stop to break even. Let's see what it gave. So this range is a 1. Oh, it actually gave a 2. It did. Oh, okay, so I've noticed this. Okay, I was hoping it would actually do this, but I wasn't sure. Okay, so if your loss is this size, then you want a win to make back that loss plus profit, right? This market's for the greedy, but also the smart. So this is your loss. That means this will break you even on that loss, but 1 again will make you win. Notice how it goes pretty much exactly to that 2, a little bit past it. So you make back your loss here, and then your profit on the day, there. Isn't that interesting how that works? Just going to note that. Now, it doesn't always do that, and again, when you're shorting, be careful because it could never go back. And as you can see, it wasn't a big short. Again, though, we have this range. What happens? Candles start gapping away up here, retraces, takes off. So you can see they're all interrelated. You don't have to be aware of the previous day's ones, but if you are, if you're marking them out and keeping them marked out, you will see how they interrelate to one another. Now, again, if you have too many of these ranges from all the previous days all overlaid, you're going to get inundated because they're going to be covering all over the place. Okay, so it is what it is. If anything, I would just mark the ones that haven't been revisited, and maybe mark the ones that have been used, but just like have them for a few days, like 2-3 days, and then expect them to not work anymore. As you can see, even here, closes below, kind of turtle soups this range, but then goes up, right? As you can see, again, I'm just going to show you right here, gaps away from it, retaps it, there's a long right there, you see? So they're relevant, but it's kind of hard to say how long they're going to stay relevant for. I would say be careful, because the more you study how they're all connected, the more complex it will get, and then the harder it'll be to be profitable. I would just stick to the basics. Okay, where do you guys think the 930 candle is? I was actually going to guess this one, but that's pretty, yeah. So let's do it again. 930. Boom, doesn't make a decision, gaps away, boom, there's an entry right there. If you didn't quite get filled there, though, it gives you another chance right here. As you can see, it takes out a high right there from this long. Now it happens during the London session again. Now notice though, see how it punches right through that really quick? There's a reason that it has to sell off hard through that range. They have to get through that range to indicate a short bias. So anyway, I kind of gave away what I was going to get to, but this, once it's punched through to the short side, that means it'll probably become a rejection level again to sell off from, which it did right here, as you can see, multiple times. It even turtle souped it, but again, once it gapped below it, it became a short here, which again is actually tied in with, I think, well, the confirmation of this range, right? It's gapping below this 930s range. Anyway, so they're all interrelated, but again, you have some shorts. Like this one, it doesn't quite tap it, but it's the same idea. Anyway, so again, talk about holy grail, guys. Okay. The algorithms, I would be surprised if this video gets views, because they're not going to want me to give this shit away. So pretty obvious that this is the 930 candle. I think it's pretty obvious also what the trade was. I don't even have to put the top of the range. As you can see, gapped away. Near the end of the day, it trades back up into that range. People are taking on short positions, and they'll be taking partials and stuff. Anyway, big reaction. Okay, it's that fucking easy. Okay, now do you believe me that ICT is a fraud? Now do you believe me? Okay, look at this one. I don't think it comes back to this one for a while. Maybe not at all. But I'm sure eventually it did. And I'm sure it had a reaction there. Let's see. No. Okay. I kind of want to move to the next contract to see what it does, because it'll eventually go back there. Let's just see. Now, sometimes it goes away for a long time and it comes back and it completely turtle soups it, where it'll like go past it. But I would expect, since there's not like a defined high near this for it to take out besides like this, I would kind of expect a strong reaction from here. So I'm going to open up in a new tab. Actually, I'll just go on this one. Oh, no, that's a weird window. Come on. Let's do NQZ 2020. Oh, I'm dumb. Gotta do this. NQZ 2020. Okay, we have to go back to the beginning of it. Okay. So this level is 1217775. Okay, so let's find that level on our chart. 1217775. One, 17775. Okay, that's close enough. I'm just going to scroll forward. If it'll even get there in this. Guys, look at that. Now, I don't know if it turtle souped. It might have turtle souped that opening range right there by a little while, but like even this, guys. It's literally right there. There's a reaction. Okay, so this is how the markets work. Okay, I literally just proved it. Okay, anyway. What do you know? 930 range. I'm just going to show the low of it because like you get the time. Look, you have to hold overnight. This is why day trading is kind of rough for if you want to trade this exact strategy. But if you have the margins, you can hold futures contracts through the close for 1 hour, or you could just close the position and then reopen it once the market opens again after an hour. I mean, you might get like slightly worse positioning or whatever, but like, you know, if you just want to day trade, that's, you know, beggars can't be choosers. So, okay, obviously this is the 930 range, right? You know, the biggest candle around 930. It's probably going to be the open. So, as you can see, you have a gap up. 1 candle, 2 candles. I personally wouldn't consider that a good entry. Obviously, apparently it was a good entry, but it wasn't very clear. So I would expect a strong, as I was saying, expect a strong reaction when it comes back into this range again. Okay, guys, is this making sense? You can't disprove this. Like, once you've seen this, you can't disprove it. Now, okay, let's go. Okay, I personally would trade the NASDAQ if I were you, because after seeing this, you have no reason to try to trade anything else. Because this is a long bias. So not only do you have the help of this, but you also know which direction it's going to go in the long run regardless. Forex is a little bit different. Why is Forex different? Well, okay. Do I have none of my... Ugh. Gotta put on wick bodies. Alright. Okay, so... why is Forex different? Well, let's take a look. Let's see. Let's go to Wednesday open, 9:30 a.m. We're on Euro USD, 9:30 a.m. So this asset, I would kind of expect it to respect the same type of strategy. And it kind of does. As you can see, it gaps away. Right here, boom, that's your long, right? There was a failed short though. So like here, you would have been trying to go short. Once it confirms long, you'd take a loss on the short that's this size, and then you would try to recoup that loss plus then make gains on the next wins, right? Anyway, the reason why it works here is because what are we trading? US dollar, basically, right? If you're doing something like... Here we go. This is a good one. Okay, so if you're trading something like this, why is this not going to work? At least not the same way. It could retrace to this and go long, but okay. I don't have them on this chart. I have them on this chart, or do I? Where's all the... It's not showing them. That's annoying. Okay, so I basically have... all these are... different times when different stock market exchanges open around the world. If you're trading something like Euro JPY, which I don't trade at all, you have to know when Europe's stock market opens. So I would look at like Germany. I'd probably go based on Germany since they have a big economy. And then I'd also look at when Japan's stock market opens. The first 5-minute candles of those opens are going to be where your opening range is, right? And it's going to respect that. This is not going to respect 930. It could. Okay, like I admit, there's a lot of traders from the US who probably still trade this pair. So it might be valid at 930. So let's look at the 930 candle. Okay, so as you can see, this is exactly proving my point though. There might be a reaction to it. Let's just see. 930. Okay, there still is. There still is a reaction to it technically. Yeah, okay, so I guess it does work. It does work. But as you can see, you're going to have a lot more losses with this type of stuff, because it's not just when New York starts trading. It's when Germany starts trading. It's when Japan starts trading. So to me, that's more complicated. I'm good on that. I don't need to trade that shit. Okay, I'm fine with NASDAQ. It's simpler. It goes one direction in the long run. Like, it's just more profitable. Like, guys, spreads, commissions, Forex brokers, like the way they're all so shady and stuff, and they'll like open the spreads on you. You have absolutely zero reason to be trading a Forex broker unless you absolutely have to. Even then, if you're outside the US, just trade the NAS 100 CFD. They'll open spreads on you, but you can account for that. At least you can trade based on the strategy on the NAS and just maybe have a little bit less profit. There's no reason. Forex is inundated by central bank manipulation, like all this shit, like all these like Forex brokers who have like, they literally have like reserves on hand of like amounts of electronic amounts of these currencies. And so like it's way more complicated. Price isn't always accurate. Like every broker has slightly different prices for the same assets. Like that should just tell you it's just sloppy. Okay, Forex is sloppy doppy. Forex is doomed. Okay, futures is where it's at, especially in my opinion, the NASDAQ, which is tech stocks in the United States. Like that's what's hot. That's what's always going to be hot. Like that is like a major pusher of the entire world economy. Apple, Microsoft, Amazon, Google, Facebook, Tesla, Nvidia, all this shit. Okay, this is what you're trading anyway. Like what you're trading here is a manipulated amalgamation of all of those stocks, and those are the most relevant to business around the world. They're the most relevant to everything. Just trade that shit. Like fuck everything else. Trade that shit. There's no reason to trade anything other than the NASDAQ. I don't even trade ES. Okay, I think that NASDAQ makes bigger runs than the E-mini S&P. Okay, I literally think that I think the Dow is even better than the ES. So I would trade NQ or YM. If you really want to trade Dow, trade YM. But my personal opinion is that the NASDAQ is the most profitable instrument, potentially profitable instrument that you could trade. Okay, and I don't know why, even before I was sure of that, I just knew. I had a gut feeling that the NASDAQ was the place to be. And I've stuck by it. Okay, let's go to another day. Okay, so this one actually is a losing day, so this is good to see. This is good to see. Gaps away from it, boom, loses. Shorts, boom, also loses. Okay? So if you're taking a loss from here, you're taking a loss this big, and then you're going to take another loss that big. That's two big losses, right? Okay, look, if you have a strategy this profitable, it's going to take some chunks from you sometimes. But guess what happens? Fails. You have a double fail. What do you think is going to happen? I'm guessing it's going to give at least, now I could be wrong with this, but I'm not going to check ahead of time. I'm going to guess it's going to give at least a 3-to-1 of this to the upside. I could be wrong. Guess what it does? It actually gives more. It gives a 4, it gives a 5. Okay, but you see how it's working? You see how it's working? One big loss, two big loss. What does that mean? When this finally confirms, gaps away, retraces to it here, boom, you're catching a huge runner because the people in the know, or whatever, I don't even know who knows this, but clearly somebody who trades the profitable, the most optimal strategy of this market, lost twice in a row. The market owes them, okay, because they're the actually profitable trader. The market just fucked them twice. They're owed a big win, so it's going to give them a big win. Does this make sense? Okay, this video is going to be too long. I'm sure you can figure this out on your own from now. Okay, take care, guys.